This is Andrew Stotz of Stotz Investment Research to talk about world-class benchmarking, and in this case, I'm looking at Globe Telecom in the Philippines. Let's get a little background on this company. Founded in 1934, Globe Telecom is the second largest provider of telecommunications services in the Philippines. The company has more than 61 million mobile subscribers. That's a lot. Globe also offers broadband network, fixed line data, and fixed line voice services. So let's take a little bit closer look at the stock. The ticker code is GLO, G-L-O. The market capitalization is about $5.5 billion with $4 million in average daily turnover. It has a neutral zero beta. Sector is telecommunication and as well as the industry. The company is 47% owned by Singapore Telecoms, and let's get into it. Globe's business can be divided into three categories. First, mobile, which generates the greatest revenue. This comprises global prepaid brand and Touch Mobile, which is a cellular service brand of Globe. Its postpaid service is offered by the same two brands, making it a leader in this segment. Broadband segment is the second, which is a high-speed internet connection offered in DSL and wireless, including LTE format. Its fixed-line data business offers internet service for household and corporate users. Fixed-line voice service, the company has about 1 million subscribers, which generates a relatively small part of the company's revenue. Who wants to be in fixed-line voice? Gosh, I don't even have a fixed line in my house. All right. Globe's total subscriber base as of second quarter 2016, as I mentioned before, is 61 million. That's a lot. And its high capex for infrastructure modernization, such as making broadband internet more accessible, has great potential for excellent ROI due to low smartphone penetration in the Philippines. Let's look at that revenue breakdown again, and this is service revenue breakdown by type for 2015. Mobile, 75%, broadband, 15%, fixed line, data and voice, 10%. So the data revenue breakdown looks like that. 47 for mobile, 37 for broadband, and 16 for fixed line. Now, let's look at the world-class benchmarking score for this company. First, the chairman of the company, Jaime Augusto Zobel de Ayala. So he has been the chairman since the beginning, 1989, and we can see that this company is being run by Mr. Ernest L. Chu since April 2009. So let's take a look at the performance on world-class benchmarking. And what can we see here? For the performance over the last 5 years, profitable growth has been in the top 3 since 2014. Right now, it's number 3. Globe ranks among the best 42 telecom companies globally. That's out of 140 large telecom companies worldwide. Now, where does this success come from, this number 3 ranking? Well, what we can see is profitability, which is ROA, remained at number 3, and growth fell to an average rank from 3 last year to the prior 12 months of a number 5. So despite a fall, we still see that profitable growth maintained its 3 ranking. Now, let's continue on to understand profitability and growth in more detail, and we can see that profitability is driven by a strong profit margin. Profit margin in the prior 12 months, as well as 2014 and 2015, was ranked number 3. Very good. And on the growth side, company had strong sales growth of number 2. So the company is producing excellent sales growth, but what's happening is that the margin change is dragging down that growth rank. Margin was improving in 2014 to number 1. It was the best improvement compared to all of its global peers. That moved to number 4, and then in 2015, and now in the prior 12 months, it's a number 6, so slightly below average margin change. Overall, a good performance, number 3 ranking, that's excellent, but still could improve to number 2 or number 1, and that would drive the market capitalization of the company. Now, do you want to see the profitable growth rank for a company in your portfolio? Well, leave a comment below with the company name and the country of listing, and I'll post it if I have it.